the SALT thing with the state and local taxes, that can be a big deal for some folks depending on their circumstances. The donation to charity thing, that can be a big deal if you're already itemizing your deductions and giving to charity, or if you aren't, it also can be a thing, right? So donations and charitable giving should be back on the forefront of thought process at some point during this year, along with all the other things we talked about today.
Hi, I'm Bridget Sullivan Mermel. I've got a fee-only financial planning practice in Chicago, Illinois.
And I'm John Shear. I've got a fee-only financial planning practice in Middleton, Wisconsin. Before we jump into the new tax law, I just want to remind everybody to hit that subscribe button, help other people find this information on YouTube. And with that, Bridget, let's jump in and talk new tax law. How exciting, right?
Yeah, very exciting, I guess. Okay, so I'm going to just try to not have a lot of political commentary and just get to what's different. There's a lot, and so it'll affect a lot of people, but the changes won't be that big, I think, for anybody. But you'll want to know you can still do some planning this year. Okay, so there's a new $6,000 deduction for each person who's over 65. Okay, so if you're married to another person who's over 65, they get it too. This is in addition to the usual, like if you're using a standard deduction, it's in addition to the additional amount you get in the standard deduction. But there's some income limits. Looks like 150, 300. So if you're making too much money, this will be limited or
And
phased out.
is that's I think that caveat's going to apply to a lot of these new rules, right? Is some of them like across the board, but a lot of the things are, yep, here's the rules except for, depending where your income is, right?
Yeah, right.
So
And so
be sure to check that. If we forget to say like, oh no, take this, make sure you double check all those income limits as you do your planning this year.
yeah, absolutely. And then a lot of times it's hard to know exactly what your income is going to end up being at the end of the year. So that's a big one. But this was to try to get the campaign promise about Social Security. So it doesn't directly address Social Security. It just tries to pay the tax on some people. But I think this will actually help a lot of people. This is
Yeah,
to me,
so an extra 12,000. I'm a married
right.
couple over 60, an extra $12,000 in deductions, right?
Right, exactly. So I think for our viewers, I think that's the biggest. Next, there's a $1,000 charitable deduction for non-itemizers. This starts in 2025. It's cash only. So you can't give away your old stuff and get this one. You have to give away cash.
Yeah. And it's
Okay?
1,000, I think that's a 1,000 for singles and 2,000 for married folks, something like
Absolutely.
that,
Yeah,
right?
absolutely. $1,000 each.
So who's going to benefit from that?
People who give money away that don't itemize.
That don't itemize. So if we're taking the standard deduction on things, which is something like 90% of folks these days aren't itemizing their deductions, right? Something like that.
Yeah, but it'll be more people will be itemizing because of some of the things that we're going to get to a little bit later in the show.
Oh,
So
awesome.
we'll be itemizing, but for all the non-itemizers, this is great. Yeah, and
Yeah.
a lot of our viewers probably don't itemize. So
Yeah. Yeah. Awesome.
yeah, it's neat. No tax on tips. So this is, I just do want to say this is an interesting one because my office is right by Wrigley Field. And so I know a lot of beer vendors and they used to get all their tips in cash, right? And now Wrigley is cashless. So
Right.
everything is recorded. So it's interesting to me that I think at least partially this law. So I think it's safe to say that there was underreporting of tips before, and the tip income has really increased because now it's going through credit cards, and so people have to report it. So the deal is, of course, there's a phase out. All right, and if you're making 150 if you're single, 300 if you're married, so it's pretty healthy phase out. And
Yeah.
also there's a $25,000 max on the tips. And I think there's a
Okay.
max how much tax you save too, or something like that too. There's another one also for overtime. So the no tax on overtime. Now, again, there's a phase out. And the other thing is that it only counts the extra that you get on overtime, not the base. So if you regularly get 20 an hour, and then when you get overtime, you get 30 an hour, it's only on that 10. Okay, that there's no
Yeah.
tax.
Yeah. Just to make it
And
easy.
that's going to be fun for the payroll departments to keep up. Yeah, that'll be a good one. Here's another new one. Again, don't need to itemize for this, and that is deduction for auto loan interest.
Yeah.
This is, you have to, it has to be assembled in the US. And again, there's phase outs and there's a maximum of like $10,000. Although how much auto interest do you actually pay? I mean, interest rates aren't that high, like
Right.
that you would actually be higher than that unless you had multiple cars, I assume. So those are a bunch of the biggie new ones. Any questions on those so far?
Yeah, and you might have said this, but I thought I saw a provision where the car has to be assembled in the United States, but there's some
Assembled.
domestic
Right,
requirement,
exactly.
right?
Yeah.
Yeah, some of it seems a little bit crazy when you think, all right, it's been however many years, but credit card interest used to be deductible back in the olden days,
Right.
right? And so you think like, oh, is this maybe, some of that just circling back. And the other thing that just strikes me as you go through, I mean, whether 900 pages, 1,000 pages in this tax bill, and it's been 3 weeks or 2 weeks as we're recording this since it's come out. So, we've got a lot of information, right? But there's, 990 more pages to read through sort of a thing. And for some of this, and I haven't seen much along this line yet, Bridget, but usually the tax bill comes out and then here's all the things, and then they start saying, well, wait a minute, what about this situation? Oh, we didn't think about that. What about that situation? Oh, yeah, you know what, we didn't think about that. And so that's the other caveat I just throw out there for people is, hey, here are the things and all the things we're talking about here. Yep, you can read them, you can read it, right? It's in there. But then, it's going to be a moving target. We don't have the final information, I don't feel like, quite yet, right? It's going to be, by the end of the year, hopefully, right? Hopefully by Thanksgiving, we can do some solid planning. There's some things that are really clear, right? But it's just like, it's not a one and done sort of thing when you're dealing with a bill of this size and this scope of what it's changing on things. So just for viewers to be aware that, this isn't the final word on things, right? Keep in
Final
tune
word.
with this stuff, right?
Where the purpose of our episode is really to give people a heads up for what they might be looking for to get more information on. Okay.
Yeah. Yeah.
All right.
No, that's
So
great.
let's keep going. All right. There's more.
There's more? But wait, there's
More.
more.
All right. Itemized deductions. So for us itemizers, we've got a new, and this starts in 2026, so we can do some planning there. 0.5% floor. So now we're getting into difficult fractions. We know that's interesting. So there's a 0.5% floor on itemized deductions.
So it's whatever your AGI is, right? So if your
Oh, yeah,
AGI
yeah,
is
yeah.
a
Right.
hundred thousand,
Right.
then the only amount over 500 is deductible. Or if your
Right.
AGI is 200,000, only the amount over 1,000, right? So it would be easier if it said, hey, take 5% off of this, but you
The
got to go back to
deductions.
your adjusted, right?
Yeah.
So there's a limitation on, and is that one just for donations to charity, or is that overall itemized deductions?
Well, there's another limit with overall itemized deductions that we'll get to in a
Okay,
second.
good. We'll get to it.
This is one's just for charitable, for itemizers. And again, if you're not itemizing, you got a little extra thing for
Right.
charity.
You got that 1,000, 2,000 deal.
Right. Okay. The other thing, and this is another bigger thing that'll help a bunch of our viewers, and that is SALT, which is state and local tax deduction. So that is going to increase from now it's 10,000 total on a return. And so that's what stopped a lot of people from itemizing. It's now going up to 40,000 on a tax return. Okay. And there's a phase out, but it's not until you're over 500.
Yeah. So pretty big
So
number there, right?
pretty far, so that's sweet. Okay. Now this one is nice and complicated. We're going to use some tax software for this one. That starting in 2026, and this is one of the things that you're alluding to, if you're in the 37% bracket, which is the highest tax bracket, your itemized deductions only count like if you're in the 35% bracket.
That's kind of the P's limitation.
Right.
PEASC is named for some
Yeah.
senator or congressman, right?
Yeah. The
We
old,
used to have that, then it went away, then it's back, and now it's kind of back in a different fashion, right?
right. Exactly. Okay. And here's a few more new things. All right. 529s are expanded what you can spend them on. And this is another interesting one. Starting in 2027, you can grant $1,700 to scholarships. The states are going to come up with a scholarship. These are K through 12 tuition scholarships. And there's 100% credit for it. So if you give $1,700, then you get $1,700 off your taxes. This goes to your first thing about question marks.
Yeah.
This is a concept. And also when you're saying like all the states are going to figure this out, like, all right, not every state has equal functionality on figuring this kind of stuff out. So that'll be something to watch, interesting to see how it goes. Then there's these Trump accounts. Okay, so this is kind of a newfangled IRA. I think the important thing for people to know and to keep the radar up for is that if you are born 2025 through 2028, so if you have grandkids or if you're having kids and you have a kid this year, they can get $1,000 in this Trump account. There's of course some caveats, believe it or not.
Yeah.
And you can keep putting money in. So it's kind of, I would say it's like an IRA that you can put money into when your kid's young. Okay. You don't get a deduction for it, but then it's after tax when you take the money out. If they're born now, it's kind of a handout. Here's $1,000. You have to opt in. Nobody's setting this up for you and giving you $1,000 though. So this again, a lot of question marks on this. So like at the financial planning seminar that I went to, they had this like multiple page list of all the questions they got about this. And again, it's kind of a new flavor of IRA account. It's it'll be interesting to see how it fits in with all the other types of accounts.
Yeah. Yeah. But free money, and you have to
Yeah,
sign up for it. So kind of like a
right.
401k type thing. Like, listen, if there's free money with a company match, but you got to sign up for it. So it's one of those guys to be aware of.
Right, exactly. And 2025 counts. This goes back to your point of like the moving target. This will be something that the IRS has to put out more guidelines on, and companies are going to have these accounts. Fidelity, Schwab, all those places will have these, but they're going to probably wait a bit until the IRS issues some more guidance too. So, but it's 2025. So that means that you don't want to wait around too long
Yeah.
to see what's going on with this. Yeah, so interesting stuff. Interesting stuff.
Yeah, a lot of things to be aware of. And again, not the final answers on these things, right? But know that these are part of the new regime. And if they apply to you, right? The things about if you, the SALT thing with the state and local taxes, that can be a big deal for some folks, depending on their circumstances.
Yeah,
Right? The donation to charity thing, that can be a big deal if you're already itemizing your deductions and giving to charity or if you aren't, it also can be a thing, right? So donations and charitable giving should be back on the forefront of thought process at some point during this year, along with all the other things we talked about today.
right.
So
And at the end, if you want to try to take a look at what our predictions were and tell us how bad we how we predict.
yeah,
Because one of the things that I did not predict was that it would get done this year. So, or get done in the middle of the year. So we'd actually really have some time to plan. I would have thought that it was going to get done at the end of the year, like last time, and there would be a lot of drama around it. And obviously there was a lot of drama around it, but it's not, I got to say that I appreciate it getting done now.
yeah, absolutely. Well, I think that's a great place to wrap things up. Again, I'm John Shear, and I run a fee-only financial planning practice in Middleton, Wisconsin.
Richard Sullivan Mermel. I've got a family financial planning practice in Chicago, Illinois. John and I are both taking clients now, but we're both members of the Alliance of Comprehensive Planners. So if you want to find an advisor in your area and you like how we think about things, you could check out acplanners.org.
And don't forget, hit that subscribe button.